Hey folks, do we have a juicy one here today about Ray Dalio literally talking about the stock market bubble? But first, you remember literally just the other day when concerns of variance were running the narrative across the news cycle and everyone thought that was the reason that the stocks were falling off a cliff. And then we all thought, hey, this could be the start of a bear market, a crash, perhaps a buying opportunity. But those buying opportunities never seemed to last, as that was clearly a buy the dip for a Tuesday afternoon rip. I mean, take a look at this, folks. S&P 500 dropped drastically. I was getting really excited today, only finding out that the S&P's back up 2.23%. The NASDAQ up 2.4% from those bottoms yesterday, and the Dow Jones up 2.3%. Like, it's so unpredictable. Obviously, it could drop again, and this could just be a midterm blimp before the news continues to sell the market off. But I don't know how true these narratives are to the actual influx and outflows of capital in the market. I mean, clearly it could be from hyperinflation concerns as well. I mean, we're seeing bottlenecks across the board. I mean, we saw Biden here with the Federal Reserve, Jerome Powell, releasing statements. He made clear to the Federal Reserve Chair, Jerome Powell, that the central bank should take any steps deemed to be needed to combat rising inflation and support the recovering economy. I don't know what exactly implies upon that other than raising interest rates, because inflation's getting a little out of control. And I get most of my news cycle, honestly, I try and have some fun with this. So I found these great memes like inflation according to the Fed, because you remember how they weren't too concerned about it. And they were like, not a big deal, not a big deal. The news was like, might be a big deal. The memes were like, oh God, inflation's out of control, right? I mean, real estate, everything that they don't calculate in is going nuts. And then reality hit, and it was much worse than we all could have anticipated here, folks. If you love memes, come on over to the Stock Memes Facebook page, guys, we put together. I'll leave the link in the description below. There's been so many funny memes today, but that's not what we're here for. What we're here to do is listen to the great, the infamous Ray Dalio, who's made some recent comments here. And I found some really interesting stuff toward the end of this video, so just take a fascinating listen.
Okay, so why are we in a bubble? This chart goes back to 1900, and the top chart shows debt to GDP. The bottom chart in the blue line shows interest rates, and the red line shows the printing of money, the amount of money that's going in. And so what you can see is when you have a lot of debt, like we have a lot of debt now, and there's a lot of increasing debt, and there's the hitting of zero interest rates in both cases, there's the printing of a lot of money. And that's a key element of the bubbles, because they have a lot of liquidity that comes into the market. And then there's a lot of throwing around that money in terms of bidding up all sorts of assets. So you could see that red line. You could see how when the blue line hits zero, the interest rates 1930, starting in 2008 and since, we've had that movement. Then you see the largest movement now. So a lot of liquidity, a lot of debt financed debt monetization makes for a classic bubble. Other items are new IPOs, with particularly if they have no earnings, high price to revenue, or in many cases, no prospect of making money. Those are bubble considerations too. So I would say you can't say the stock market is in the highest bubble. You can't even say that it's necessarily in a bubble. You have to distinguish which stocks are in a bubble or have been in a bubble from those that are not in a bubble. There are a lot of stocks that aren't. And that bubble is a little bit like the bond market's bubble. So I hope that gave you a little bit of flavor of bubbles and how I look at them and where we are. Thank you.
So at the end of this video, he goes into a lot. I'll also leave the link in the description below, but it seemed like such a cop-out thing to say at the end that, oh, well, we can't say it's a bubble. It looks kind of like a bubble. All the factors are there for a bubble, record low interest rates, all-time high debt in the markets across corporate margin. Literally everything is just through the roof here. Real estate's out of control. But hey, we can't necessarily say it's a full-on bubble. You have to look into the individual sectors. And when we're talking about IPOs, boom, another red flag toward bubbles. Endless companies, SPACs getting valued at crazy billion-dollar valuations that literally have zero revenue. This, like, everything that he mentioned, like, really screams a bubble. But I guess just to cop yourself out to not get in too much trouble in case the markets don't crash, you're like, hey, just sectors, just secular stocks. Give me an example, right? Like, what is an example of a stocky class in a bubble? Because obviously we can talk a lot about SPACs, but more particularly in the broader scheme of things, because we all know the S&P 500 PE ratio is absurdly high. It's higher than most of the top weightings on the S&P 500, being things like Apple, Apple, Amazon, Facebook, they all trade much lower because I think the S&P 500 PE is around 45, and they're all trading between like 30s to mid 30s. And you know, when you take a look at things like Zoom trading at 122 PE, even though it's growing fantastically, is that considered way overvalued? What about GME? Here's a prime example of a company with absolutely no fundamentals trading for $13 billion still. And this was just a short. Is that part of the bubble? And I mean, when these things burst, does it take the whole market with it? I mean, take a look at something like Tesla, right? I mean, Tesla could be easily considered in a bubble here as well, and many people do. So I find it very fascinating that he didn't really give us a conclusive answer on what happens if all of these stocks burst as well. What happens if, you know, all these people start flooding out of the market? Because one of the telltale signs of a market crash is when every one of the grandmothers getting in. And thanks to Robinhood, that seems to be the case, especially looking at things like Doge and highly speculative investments. Does that mean crypto's in a bubble? Heck, it just burst by 50%. That's a true tail sign of a bubble. 30% correction across the board, right? So technically Bitcoin just burst. I don't know exactly what's going on here. We are in an insanely weird market right now, but there is a clear sign. And I've said this before, like against the wall, the paint is written there that we are in a relatively hyperinflated market. It's just a matter of what specific secular sectors, this individual sectors are going to be the ones that are overvalued, whether it is things like SPACs or whether it is things like Tesla, and whether they all eventually come down. Because what's Tesla trading down from its all-time highs here? Usually they say about a 30% correction is typically a pop in a bubble to some degree. I mean, we're almost seeing it with Tesla here. So I'm so confused by his statement, but I want you to watch the full video and let me know in that comment section below what you thought about his statements there, because I honestly think we're in a very odd place. I'm relatively hesitant, but I'm long-term bullish on my favorite companies, like my big FANG stocks, like some of my REITs, my utilities that I think are trading at relative discounts. I repeat myself like a broken record, guys, but I'm just very cautious in this market. I don't trust a whole lot of what's going on, just because, again, across the board, red flags everywhere. Let me know what you think. Stay cool, stay awesome, and I look forward to catching you tomorrow.